Yes. Okay. So with that, let's get started with the interview proper. So this will be a quick interview. I think about 30 minutes, right? 40 minutes long. We'll have a bit of time for Q&A at the end, right? But so let's go straight to it, John. I think a lot of folks know you already, right? They know you're a co-founder of Growth Investing Mastery, right? They know that you are an investor who has started in a way young age. But firstly, for some of the small number of folks who might not know you, right? You want to share a quick introduction of yourself and what you do before we go dive deep, right, into finding out about how do we navigate the market madness right now?
Yeah, so I actually started learning investing when I was young, when I was about 18 years old. So I went to my first seminar when I was in JC2. So that was about many years ago, about seven years ago,
Wow.
right? A really long time. And from there, I actually started learning investing. And I became really serious when I was in year two in university. So year one, I was trying to find out what I really liked. So I actually started this a community in university. So I started to teach basics about investing for free. And I still remember I actually sent out an email to everyone in the school. And I sent to the principal, the provost, right? Everyone, right? Basically year one to year four. And then the student council actually came and found me. It's like, who's this guy conducting an investing workshop, emailing everybody. And then in university, I tend to go with the approach of do first and say sorry later. So that's how I realized I kind of enjoy teaching people, educating about investing, because I see a lot of my friends, they're losing money over things which could be easily avoided, and that kind of frustrates me, right? Because just spending 1 or 2 hours on learning some basic stuff can actually prevent you from buying companies that can go bankrupt, right? So that was something that resonated really well with me. So from then on, I actually decided to take a sabbatical from university, and then I took about 3 to 4 sabbaticals before I actually quit university to focus on my passion, right, which is to spread the word of growth investing. So I'm not sure if you guys for your audience here, I actually have a YouTube channel and I talk mainly about growth companies. And my last line, I always end off my videos with only invest in the best growth companies in the world. And I'll see you in the next video. I always say that, right? And I feel that in today's time, if you don't invest in companies that are growing, then in a way it's very dangerous, because 5 years ago or 10 years ago, maybe if you're not catching up with the latest technology, it's fine. But today the world is changing so fast. We are talking about robo taxis, we're talking about driverless cars, right? We're talking about 5G coming on. Even living in virtual reality maybe something that's coming soon, right? So if you're not fast to identify these trends, right? By the way, even if you're not an investor, right, by knowing these trends, this can really help you increase your income dramatically, right? Because you will know which industries generally have a huge tailwind, right? And if you work in these industries, trust me, you're going to have very fat bonuses for the next 5 to 10 years. All right. So if you can just choose the right companies to work in, that's going to dramatically change the income that you have. It's going to change your life. All right. So I think, even if you come in this not being interested in investing, but knowing where the world is heading to, I think that's really important as well.
Wow, I love that. So thanks for sharing a quick introduction. I love the fact, right, that you say that it's not just about if you're an investor, right? Because it's not just about investing money, but where you invest your time, right? And of course, career is one of the best ways where you invest your time, right? So that's also a great good reason why you want to find out, right, a little bit more about the interview, about what John and team does. Okay, so with that, let's get started, right? So the first question, right, and I'm curious with myself, right? And I always regard, right, John, right, the folks in gym, right, as what I call my secret weapons, right, to helping me invest, right, a lot more confidently and more securely, right? Because they provide the community, right? They provide that emotional management support, right? So with that, right, based on your observations, John, right, based on the people you've been talking with, the communities you're in, right, what do you think are the biggest mistakes you feel that investors have been making right now in 2021, right? Just go straight to it, right? Because I think that's something that we want to be concerned about, right? That a lot of investors might be making some mistakes that could cost them dearly in the future.
Right. So I think one very common thing that in fact, I told this to my community recently. Back in maybe 2000s or in the 1990s, right? I think the number one reason why people lose money is because they do not know what they're buying. Literally, for example, if you ask someone to buy, for example, Amazon back then, maybe they don't even know what Amazon does, right? So, back then the internet is not a place where it's so connected yet. The internet penetration rates are not high. You do not have really great forums like Reddit. You do not have people like you do not have a lot of content creators talking about stocks on YouTube, right? YouTube used to be the place where you go for drama, where you go for comedians, right? Nowadays, the financial community in YouTube is really growing a lot. Okay, so now when information is so accessible, right, people do not have the problem of identifying great companies, right? I mean, if you were to ask someone whether, if for example, Palantir is a high quality company, right? So even folks listening now, you don't know what Palantir is, right? You can Google, right? You can Google, is Palantir a good company? And you're going to get 10 to 20 search results which are high quality information, right? So I don't think we really have the problem of misinformation right now in this age, right? So the reason why investors are going to lose money in the next decade is because they overpay for high quality companies, right? So I think that's going to be a huge problem, and the main reason how people are going to lose their wealth, right? Because I think retail investors nowadays are getting smarter, right? They don't have a problem understanding what they're buying, but they have a problem knowing what is the right price to buy a certain company, right, or a certain financial instrument, right? Like for example, Bitcoin, Ethereum, whatever it is, right? We can talk about bonds and everything. So I think valuation is the number one skill that people should really equip themselves with, and it is the most underrated, right? Because I think when we talk about valuations, people tend to get turned off. They're like, "Oh, John, valuations. I haven't been through financial. I don't have a financial degree. I haven't been through financial classes. I always failed in my financial modules back in school, right? So how do I really master it?" So there's actually a really simple way to do this, and I feel that if you have that, right, you will have a huge edge over other investors in this decade.
Okay, so the first mistake I hear, right, is the fact that, dude, like right now there's so much information, right? So for us to know the good companies is not as difficult as it was years ago, right? But what you're saying, right, what I'm sensing is the fact that right now valuation is a big challenge and mistake that people tend to make, overpaying for what's good, right? But the thing is, the fact that to study valuations, people think is tough, right? It's tiring, it's complicated, and that's why they don't do it. But that can actually lead to one of the biggest mistakes into actually their investment journey, right? And I think you mentioned a bit about crypto and stuff. We should go through in just a little bit later, right? But besides valuation, John, what do you think are some other mistakes that you feel that a lot of investors you see are making right now?
Yeah, so I think one thing is to kind of follow people blindly as well, because I think with the rise of course, more content on the market, people are actually just blindly following people. For example, if a very renowned investor on Twitter or YouTube actually says that, I'm going to buy into this stock, and people are actually going to rush into it and just buy blindly. But that's not the way to go, right? Because end of the day, I always tell people, we as content creators, we can lend you stock ideas, but we can't lend you our conviction, right? And conviction is something where, for example, for the stocks that I talk about, right, if they were to fall by 50% the next day, I am more than confident to actually double down on them, right? So I always tell people, right, if your current stock holdings in your portfolio fall by 50%, and if you do not have the courage to double down, all right, then why bother even initiating a position in the first place, right? If you don't even bother, or if you don't even have the intention, right, to build a sizable position around the stock.
Okay, so from what I'm hearing, right, as in because right now the markets are a bit choppy, right? People are not so sure what's going on, right? And because of the fact that people are worried and they just follow blindly, right? And so I think I love what you said, right? People can buy what other people say, but you can never buy their conviction. So I think there's something to really look on. So just if you want to share a little bit, right, John, like what would you do for investors that might be starting out or have already invested, right? And you say that I want to start building conviction, right? Where do you think is great, right, for the investor to actually get started on that steps on building conviction, especially right in these turbulent markets in this space right now? What do you think?
Yeah, as simple as this may sound, I think the easiest way to do this is to really invest in companies that you guys are really aware about. For example, I have some friends who work in Micron, right, for example, and they are pretty much aware of the semiconductor industry, right? I have friends who actually work as IT consultants, specifically in the area of cybersecurity, right? That is where companies like CrowdStrike, Zscaler, right? These companies will actually be something that they can understand, right? Because this is what they do every day, right? It is within their circle of competence. They deal with this every day at work, right? So you really want to go into things that don't require you to do a lot of research, all right? and you don't have to go through the entire pain of going through the entire learning curve just to learn it, right? And that is a very simple way to look at and to really develop your conviction when it comes to buying your companies. And also, I think one thing to really note is to really read through the company's investors presentation, right? I'm not talking about annual report, which is like 300 over pages. I'm not talking about the quarterly statements, which is about 100 pages. Right? I'm just talking about the simple investor presentations. Look at the slides, right? Does the business make sense to you, right? Do you think that this is something that will grow in the future, right? So I think that is something that is very simple for people to actually build conviction on. Yeah.
Okay, so I think and what we're hearing, right, is really about not jumping into space, right? Just actually investing in what you know, right? And I think it sounds like I said, it sounds simple. People have said it before, right? But it's back to the fundamentals, back to the basics, right? And it's even more important, right, as the markets are getting more choppy and volatile in today's world, right? So guys, if you're watching this whether on Instagram or Facebook, right, time to comment if there's something that you want to remind yourself, right? How many type yes in the chat if you find that's important and you have been doing it for yourself, right? And really want to ask yourself, right, whether have you been following, have you been conducting these daily mistakes in your investment journey so far this year? All right, so with that, John, I'm going to move on to the next quick question, right? Is what, and I don't know if you have shared this publicly before and stuff, right? But what are your personal thoughts, right, about the crypto market right now? Because I know growth investing, they talk a lot about stocks, right? And we have been doing very deeply, right? A lot of interest in crypto right now. What are your thoughts? And maybe share a bit about maybe if you have any action plans or any like a strategy, right, when it comes to this getting hotter and hotter space right now.
Yeah, I think it's very convenient for growth investors or even value investors like myself to just shit on crypto. And, I feel that most of the time people who shit on crypto, you want to ask them if they really done their research, right? Have they really read through or spent at least a week, right, reading through what is out there in the market? Because initially, I want to admit that, for Bitcoin, I really think that Bitcoin is something that is of no value, right? So a lot of people see it as a store of value like gold, all right? But seriously, if I were to compare Bitcoin and Ethereum, both are cryptocurrencies, right? Both are cryptocurrencies. I would very much prefer Ethereum, right? Because why Ethereum is so special is because they have this ability to actually do contracts on the back end. So it becomes not just a cryptocurrency, but it's something that is programmable, right? It is something of value, right? So interestingly, I actually met some of my friends, right, who actually showed me a crypto bank that is run on Ethereum's network, right? Because Ethereum has all this logic on the back end, so they can actually put their code and run it on Ethereum's so-called engine or what you call it, right? So, but it's just a disclaimer. I have no I'm not vested in any cryptocurrency, and I'm still in the infancy of basically understanding more about them, right? So if you guys, if there are any crypto experts in the chat, right, so be sure to just correct me if I'm wrong. Okay, so they were able to find a crypto bank, right? So this crypto bank, what they do is really interesting. They are able to basically, they will allow you to borrow money, right? So if you borrow money, you actually have to set aside collateral in terms of other cryptocurrencies, right? It can be Ethereum, it can be Bitcoin or whatever it is, right? So you set aside a collateral, and then they will charge you an interest, right, of about 20%. Sorry, 30%. Okay, so if you were to deposit money into this crypto bank, they're going to pay you an interest of 20% per annum. So I thought this is interesting because think about this, right? If even though this is not very regulated yet, but can you imagine maybe 20 years later, 30 years later, you could really have these automations going on in the world where banks do not need bank tellers anymore, right? You do not need loan officers to give out loans, right? Because you have all these smart contracts working on the back end. So when I think about this, right, wow, this is something that is run by virtual contracts. There's no cost that you incur as a business to run this entire deposit and loan thing. This entire ecosystem is, in a sense, run by the community. So I thought that was really powerful, man. And because of that, because it was able to do something that was creating real value, right? We're not just talking about coins doing nothing there and just rotting. We're talking about a cryptocurrency that has a real use case here in the form of a virtual bank. So I was able to put a valuation to this crypto coin. right, which was riding using Ethereum's network. So I thought that was really interesting, right? So people calling crypto a complete fad, a complete scam. I don't really agree, right? So to a certain point, I'm starting to feel that cryptocurrencies that are programmable, right? These are the more useful currencies moving ahead. And I think, with Ethereum moving on to Ethereum version 2, now they're able to handle more transactions per second. So if I'm not wrong, they're able to handle up to 100,000 transactions per second. So right now, MasterCard and Visa, right, they are handling about 40,000 transactions per second. So this could potentially be used as a currency, even though I don't really think it will be, because I mean, if you think about crypto, its use case is not just currency itself, right? It could be used as smart contracts, right? As for example, in this case, I shared with you guys as a bank, okay, as insurance. Maybe people can use the crypto technology, right, to underwrite insurance policies. So I may not need to be a traditional insurance company to go through. I don't need to go through all the regulatory hurdles. Maybe I can write a private insurance contract with you, Marc, right? Let's say if today I do not go and exercise, right? And if I do not exercise, you'll get $10, right, in cryptocurrency. Yeah, so this kind of use cases are very, very interesting, right? So I wouldn't dismiss crypto to be totally useless or a scam, but I would think that the use cases that are coming out right now is something that we have to watch, right? And as these use cases becomes more and more interesting and more relevant to the products and services that we have in our world, then I think this is where the crypto coin itself, the particular cryptocurrency, will actually rise in value.
Wow. Okay. So I'm getting a lot from this, right? I think number one, right, is and I love the fact. Okay. So guys, if you don't know, you're right. John has a YouTube channel, right? He talks about different technology companies, right? One thing I love about him is the fact that he's very grounded, right, with his investment thesis, right? So one thing I've observed, right, is the fact that you did not talk about how the fact that big companies, big boys are coming to play, right? Big whales, right? You're not talking about what I call a bit more short-termish moves, right? You're actually talking about actual use cases, right, that can be used for the years to come. Because why? Once the cases are there, right? Once there are use cases, right? Ultimately, right, people come in and then the demand would move up. So that's something that I sense very strongly. The next thing, right, is if you want to watch John's channel, right, you realize that he can visualize or he can project things, right, that might be difficult for the everyday person right now to actually picture, right? Talking about virtual reality, right? About things about Palantir, Fastly, right? And he actually simplify, right? And I think that was a very simple explanation, right? And focus on what is the potential future of the case. The third thing, right, and this is something, as I know it's a bit deep and stuff, right, is this amount of detail, right, but you still have not invested in it because from my sensing is that your level of conviction, right, is still not at the level you would like for you to make a significant move, right? So folks, if you realize that whatever John mentioned, right, and if you have very little idea of what he's saying, right, and you are already investing in crypto, ask yourself, right, is if crypto drops 50%, 80% tomorrow, right, will you be still have the conviction to hold it? And I think that is what I call having that principled, sound mindset, right, about being a wonderful investor for the years to come. So those is very advanced stuff, right, which I just want to put it out there for the folks who's watching, right, because I think these are things that people really need to know more about.
So I just want to add on, right, because if you look at the history of things, right, how do assets gain in value, right? Think about gold. Right, actually gold, even though it stores value, but there was a real use case to gold back then, right? So back in early, we are talking about the 1800s, right? Why is gold so important? It's because back then a lot of countries were fighting wars, right? And how do soldiers at the front line pay for things, right? Because if you're in a foreign land, no one's going to accept your currency back in your own country, right? So that is where you have your influential families like the Rothschild, right? The Rothschild family. So what they do is that they actually supply gold to the government, to these soldiers in the front line in the form of gold coins, right? So in that sense, gold has its own value there, right? And if you think about it, back and maybe more recently in the 1950s or 60s, right? Gold was actually used as something where the currency is actually being tied to gold, right? So in a way, there was some form of value that gold was actually providing to the world, right? But I think as we head to fiat currency and when the currency decoupled with gold, this is where things became a bit more problematic, right? So that is why I don't really invest in gold, because I feel like, I mean, think about it, right? If I have 1 cube of gold. Imagine this wallet is a block of gold cube, right?
Yep.
This block of gold cube will be the same block of gold cube. It will not gain any extra weight, right? By looking at this, by touching my gold every day, it will not make it more valuable in the future, right? The only way for the gold to become valuable is the perceived value, right? And when you invest into things that relies on the perceiveness or relies on people to perceive the value of certain thing, then the value of your asset may not be so stable in the long run. But if you look at this from this point of view, right, if you were to invest in a company, right, and this company generates you, for example, stable cash flows of $1 billion, and what's more, this is a company with recurring revenues, right? So you end the year with 1 billion and you start the next year with a guarantee that you're going to get about $1 billion of revenue, right? So knowing that this asset generates this amount of cash, it's very simple for us to kind of put a valuation. Okay, so maybe this company earns $1 billion of revenues every year. So maybe I'll pay a multiple of 10 times of the revenues they earn, maybe $10 billion for a company earning $1 billion of revenue, right? So in that way, when you invest into asset classes that are like that, where the value of an asset doesn't rely so much on how people perceive how valuable it is, then it's going to be much more sustainable, right? Because imagine, let's say if your company is earning $1 billion a year, okay, people are not going to pay up. People are not going to sell when the market values it at, let's say $100,000, because we know that our company earns $1 billion, right? So I also think for companies, because we have to understand the very reason why companies are created. Companies are created to solve problems, right? And if you want to be very wealthy in buying a company, right, you want to buy into a company that solves the biggest problem in the world, right? Because the size of the problem that a company is solving correlates to how big the company will become, right? Think about Apple, think about Microsoft, think about Amazon, right? These are the companies that are solving, right, huge problems in the world, right? And Palante as well. Yeah, saving lives on the ground, right? You're giving your commanders insights, right, to protect the soldier on the ground, to actually avoid or be tactful in terms of the strategy when you're fighting a war. So this is something that we really want to be grounded on, right? That is why I always like to look at use cases when I invest in companies, right? I don't like to just look at the numbers, right? Looking at numbers is pretty much useless, because end of the day, the world will actually give resources to companies that is supporting life in a much higher way or a better way, right? The world wants companies to create value. So even in the short run, you may have some companies whose stock prices go up, but if they are not really creating real value in the world, they're not solving real human problems, then they're not going to be relevant very quickly in the next 5 years. Yeah, so that's just how I see it.
Yeah. And I love it too. So from crypto, right, and we transition a bit to growth stock, which is great, right? Because I think the focus, right, is not so much about whether it's the crypto, right, whether it's the stock, right? It's whether the fact that are they solving problems? Is there an actual use case, right, that's actually valuable, right, to the human world, right, to that planet, right? And so I know you mentioned, you covered a little bit about this already, but I think people are probably wondering, right, for yourself, because you're in the growth investing space, right? You look at growth stocks, right? Could you just share maybe, right, if you could, a little bit of your outlook about how growth companies are in 2021, where do you see it going? If you just share a little bit of your perspectives on that, right? Hopefully just to ground some folks, right? At least in this turbulent and uncertain times.
Yeah, so you're looking at what time frame, Mark? You're looking at a 1 year?
This year. Yeah, this year.
Right. So I wish I had a fortune, a crystal ball to tell me, how growth stock is going to be like, because, the truth is I don't know, right? If I tell you I know, then I'll be lying to you. But what I can tell you is my guess, right? So I think growth companies are going to continue to thrive as long as you buy them at fair valuations. So the key here again is not to overpay, right? So for anything that you buy, if you overpay, then chances of you actually making gains are very low, right? But if you actually look around during the latest sell-offs, even till today, there are certain companies that have been severely sold off, right? And I think I've been very vocal on this on my YouTube channel, right? You talk about companies like Fastly, right? I think they're really, really oversold. So, as long as you pay good valuations, then in the short run, you should be fine, right? Even though right now, yes, the market is saying that, because of inflation, right, growth stocks are getting hammered, right? Growth stocks will actually not do well. But if you are someone who actually look back into history, right, and if you look at the period after World War I, okay, in Germany, where there was hyperinflation. So I kid you not, people were actually putting money into wheelbarrows, right? Like your huge wheelbarrows, and they're buying loaves of bread with a lot of money because there was hyperinflation, right? So they actually did a study, right? So who are the group of people who do the best, right, during a hyperinflation? It's definitely not the middle class, right? If you're working, if you're a salaried employee, your salary takes a while to actually adjust to inflation,
Yep.
right? It is definitely not the poor. The poor actually suffered the most because they earn so little amount of money. For example, $5, and back then hyperinflation is so crazy, right? So let me just give you guys some example. Like for example, bread could be a loaf of bread could cost you $1 today, and tomorrow it can cost you $2, right? So literally your purchasing power is eroding by half almost every day. So they found out that the people who actually benefited the most from hyperinflation, right, were businesses. Because why? Businesses are able to pass on the cost to consumers. So for example, if today, let's just a very simple example. Let's say if today I'm McDonald's, right? And let's say if there's hyperinflation on my chicken patties, or my loaves of bread that I use for my burgers, right? I can always easily pass on the cost to consumers, right? People are going to buy it, right? Because all the prices are going to go up together, and people have no choice. Consumers have to pay, they have no choice. So businesses are the most resilient when it comes to hyperinflation, right? And why I use hyperinflation as an example is because I always like to look at things in extreme, right? So if inflation is to go to really extreme cases, right, I know that as a business owner, I'm fine because I can always pass on costs to consumers. Yeah.
Wow, okay. So really, like, what I think what I said about, like, looking at history, right? Looking at actual things that happen, right? The companies that are most resilient to all these like downturns, right? Hyperinflation, right? Those companies with resilient, right? Obviously, I think back to also the fundamentals, right? Just remind some of the folks here, right? Is that companies that are strong and actually solving people's problems, right? So we have a combination of both, and this is something that Jim, right? You guys do very well, identify those companies that do well, right? That's when can invest soundly, right? And then you don't have to be worried about all this short-term market movements as well. And I will share a quick story. So I know last year during COVID, right? There was one stock that we were looking at, right? We bought it. I think a lot of us were looking at about it, so $30, right? $20 or so, right? And then 30 or 40, I remember, and it dropped down to about $10, right? During the whole COVID-19 crisis, right? And right now, a lot of people are panicking, people are selling it off, right? But the community was strong, resilient. You guys provide a lot of support, a lot of research evidence, right? Everybody came together to crowdsource information together, right? And now the company is like, I think now $60 to $80, right? And that was like so much returns for a lot of folks that were convicted, and they knew that it was not about short-term movements, but actual were the companies actually, right, solving real life problems as well. So I guess then the next question I have, right, is, so let's say a company I invest in is $50 and it goes down to $10, right? Like, for the average folk out there, right, how would you advise them to actually manage their emotions, right, during such times of uncertainty and turmoil? Because logically we know, right, okay, we're going to buy low, right, we got to can sell high, right, invest right valuations, but how would you personally advise the everyday investor to actually manage their emotions, right, during such situations of uncertainty and turmoil in the market?
Yeah, so I think one thing I think about is, for example, let's take the example, let's use a very simple example. Let me see, what's a business that everyone can understand? Maybe Amazon, right? Amazon, I think it's quite a simple business. Most people know what Amazon does. So for example, if Amazon drops by 50%, you want to really ask yourself, right, and visualize, right? Is Amazon closing its business, right, when the stock prices fall by 50%, right? Is Amazon workers leaving their jobs right, during times of crisis, right? I think most people don't leave their jobs, when there's times of crisis. So and you really want to imagine your entire business operations, right? So knowing what your business does is very important, right? You need to know what the business model of your company is. So for example, if I were a shareholder of Amazon, I'll be thinking about, I as an owner, I have thousands and hundreds and thousands of employees still continue working for me. They're still delivering the parcels. People are still ordering things online. I mean, yes, maybe people order less, but people still need to order things, right? I mean, if you live in the US, you will know you really do not, sometimes you're so lazy to drive up. It will take about 30 minutes, 1 hour to drive to a convenience store, right? It's so troublesome, right? So people tend to get Amazon delivery service to get things they want, get things in bulk, right? You don't have to carry so many things. So I really want to imagine my business in full operation and really just focus on the fundamentals. So I think the main thing why most people get so upset over stock prices. In fact, I get it very often, right? I mean, I've on my YouTube channel, I have people asking me, John, why do you not hype up the stock when the stock prices are low, and why do you talk about the stock when the stock prices are high? It's not very fair. I mean, it's very easy for people to get emotional, and some people also ask, John, why are you covering this company when the company is so lousy? So people deem the performance of a real business based on the stock price movement in the short term, right? Which is, I think, a huge mistake. And I think people actually use stock prices as a yardstick of their emotions, right? So, for example, I know this can be counterintuitive. Most people will definitely feel happy, right, when your stock prices go up by 100% or 200%. So for me, I'm kind of like the guy that always pours cold water on everybody. Yeah, I mean, I always like to tell people. So last year, when all the companies were going up by 100%, right, I told my community members, right, so if you are getting stock gains of 100%, but if your company's revenues or earnings did not grow by 100%, do not be surprised that this year your stocks will actually drop. Do not be surprised, right? So if your stocks go up by 100% and your company's fundamentals are like growing at only 30%, do not be surprised if the stock prices go down, right, back to the 30% level, right? It's very, very common. So you really want to anchor, right, your happiness based on, right, or your emotions based on how well the real company is doing. So nowadays, when I see gains of 30%, 40%, 50%, I'm pretty numb to it. I don't get happy anymore. Because why? If I obsess too much over the short-term stock prices, right? Yes, maybe when things go in my way, I can be very, very happy. But when things go the opposite way, I will be equally unhappy. I'll be equally affected, right? So the reverse is equally true. So what you want to do is to anchor your emotions or use the company's fundamentals as your yardstick, right? As a yardstick of your emotions. So nowadays, only when the company has real fundamental change, right, or they announce fundamental news, only then I will be happy, right? For example, I will not be happy if Fastly, for example, go up from $40 to $120 now, because I know it's short-lived. But if I know that Fastly launches its computing business and it does well, and the company and the company's revenues go up, right, and shoot up by 100%, I think that is real joy to me as an investor. So you really want to think yourself as someone who is a real business owner. You think of yourself, you must have a posture, like what I call an investor posture, right? And you must think like you own an entire company like a billionaire, right? You think like you have $50 billion, you're investing all your money into that company, right? And think about it. If you own a business, right, what would you care about what people think about you, right? Why would you care about what valuators think about how much your company is worth? You'll probably be more obsessed with the real cash flows that's coming in to your business, right? So I think that change in mindset is going to help a lot of people overcome volatility.
Wow, so I love the fact, right? And I actually agree with you, right? I think like earlier this year, right, when one of my top position companies were like going up, right, in a very high manner, right, I started feeling a bit like sad and emotional, man, because I'm like, oh, dude, I think it's going a bit too high. It's probably going to go back down. My emotions are going to get affected, right? And I love the fact that you focus way more on business performance, right? And that's something for me to learn as well, right? Which is the fact, okay, it can go up very high, right? And counterintuitively, I said that someone might feel sad, right? But then it's always back to the business performance again, right? I think I love that. So guys, if you like that, put it in the comments, right? If you like what John just shared, and it's a very important reminder, right? Which is to focus on the business performance, right? Focus as if you're a business owners, right? And that's how we actually win in the long run. Okay, so last question before I know, I think we have some questions from folks in on Instagram as well, right? Which is very quickly, right? What are, like, if you had to choose, right, top 3 sectors that you're looking very closely at right now, right, if you feel that has a huge potential to grow down the road? Just some of the sectors you feel that actually has huge potential that you say, hey, it might be worth looking at.
Right. So I think you really want to focus on companies that are not focusing on the infrastructure. So let me just give an example, right? Back in, maybe we talk about 10 years back, okay, you have your telcos owning the market like a monopoly. Okay, so back then, we wouldn't even have this conversation right now. We wouldn't even be going live because the cost of internet is so high, right? But the thing is, the telcos actually lay down the entire internet infrastructure, right? They lay down it so well that people are building services on top on this infrastructure. and they're actually grabbing market share away from this telco. Let me give you an example. WhatsApp never used to exist ever 10 years ago, right? And people were using SMSs. So for the Gen Z people, you don't know what SMS is, I think you're too young, right? So basically, these are text messages, right? Literally, the telco earn a lot of money from text messages. I still remember back when I was young, because of text messages, I always, my bill is always, or what we call, it will explode through the roof.
burst.
Right, and my parents will give me a spanking, right? If I send more than five, I think it was like 300 messages back then. It was horrible, right? So you will never text like how you text on WhatsApp today, right? You will never write one sentence by one sentence. You usually type an essay when you send text messages,
Yep.
right? So these telcos, they're actually losing a lot of market share because all these companies, right, what we call software companies, they are riding on this strong infrastructure, okay? And they're actually building services like video calling, right? Like Zoom, okay? Facebook as well, Facebook messaging, WhatsApp messaging, right? Even Instagram Live right now, okay? We're not using the telcos anymore. I mean, the telcos have become irrelevant in when it comes to communicating between human to human. So what you really want to do is not to invest in people who are investing in the infrastructure, because these people are the suckers. They pay the most money. They dig. So think about it. If you're a telco, you literally have to dig up how many kilometers of road, how many kilometers of cement, how many kilometers of soil just to lay your internet cables.
Wow.
Right? These are the suckers. They are laying down the infrastructure. So you do not want to invest in companies that do the infrastructure part of things. What you want to invest are companies that leverage on this infrastructure to scale. So you realize the companies that I talk about in my YouTube channel, these are the companies that are leveraging on the infrastructure of whatever that's existing. So I talk about Palantir, right? Think about Palantir. Palantir is a company that is providing a software. All right. It does not deal with the databases, doesn't deal with the data servers, right? All these are actually handled by their clients. So they're doing the high value added work, right? So when I look at the future, because 5G is going to come, right? Whether we like it or not, it's going to come at least in the next 5 to 10 years, right? You see China actually doing really rolling out their 5G infrastructure really quick, right? I mean, I don't know how effective it is. I have some friends in the semicon industry telling me maybe they are not as good, but you know, who knows, who cares? But we know that one day it will come, right? And why is 5G so significant? Because with 5G, you can actually have connection speed as fast as 1 gigabyte per second. I kid you not, right? So to get 1 gigabyte per second, you actually need to use an internet cable right now, right? But right now, but if 5G rolls out, they're able to do 1 gigabyte per second wirelessly through the air. Okay, so you really want to be ready, right? There's going to be a huge explosion in the amount of data that's going to be collected by consumers, right? So maybe next time, you know, it's not just getting data of us searching through objects, right? It may be us, where do we walk, right? Where do we go? A lot of data points going to come through companies, right? So when I look into which are the high growth companies that may come, these are the companies that deal with analytics, right? Because I think with so much data that's coming in, right, and we're not talking about 1 terabyte, we're talking about 10, 20, 30, 40 terabytes a day that a company has to sieve through, right? So companies that can help other companies or companies that can help their clients sieve through all this massive data and tell the company, hey, this is somewhere you have to look at. You're actually losing a lot of money. You actually have to solve this portion to actually give you cost savings, right? And this is what Palantir is doing, right? So, for example, they actually help Airbus and its clients to actually figure out that, hey, rather than do one major maintenance once every 6 months to change a faulty part, which is going to cost you $1 million, why not do regular monthly maintenance once every month? And the part that you need to change may cost you only $5,000 every time you change. So that is an instant cost saving of about $800,000 to $900,000 immediately, just by doing nothing and just looking at data, just by looking at insights. Done, right? So that's a lot of value that's being given to companies. So I think companies that are in this data trend, part of this 5G revolution that's going to come, right? They are going to do well, right? And that is why I look at Fastly. Your traditional CDNs, right? If you don't know what CDNs are, think of them as servers. They are not going to be able to handle high amounts of data coming at them, right? When the 5G revolution kicks off. So you need smart servers at the front to see through all the data and send back relevant data to a company, right? That's why I look at Fastly. And then you look at CrowdStrike. Why is CrowdStrike so relevant? You have so much data that's going to come in. You have to see through who is the intruder, right? Which is the person who is malicious, right? You have so many things coming in through the gates of a company. So you want to make sure that that is really great, right? So that is one trend moving forward. And the second trend is definitely EV, right? Electric vehicle revolution, right? Or the EV revolution. So I think any company that can really enable the world to go to a greener space, right? To emit lesser carbon, I think they're doing good, right? I mean, I don't know if you guys are a believer of karma. I'm a big believer of karma, right? If you can actually provide real value to humans and human race, I think the world will send you resources and support you. Okay, I'm not talking about just Tesla. There are also other new players, such as Starpick, right? STEM. By the way, I haven't talked about this on my YouTube channel before, so if you're here tonight, you're getting a steal. We talk about companies like Nuve, Nuvve, right? These are companies that actually send power back to the grid to help these local power companies to handle the surge in electricity, right? So think about it, right? Some people think electricity is a very simple thing because we take it for granted. But imagine if you have more electric cars on the road, and when it's about 7 to 8 p.m. and everyone is back from work, suddenly everyone is plugged into the grid, and the demand for electricity spikes up immediately because you on your air conditioner, your aircon unit, right? You on your switch, you switch on the lights. The entire city does it instantly. Right? Where are you going to get? How are you going to handle the spike? Right? Your grids are 50, 60 years old. They are running on boomer technologies, right? So you have these companies, software companies that is coming in to help the grids to handle this, right? And these companies are going to do well. Yep. Okay, and so I think these are the two main drivers of the future, right? You have the 5G revolution and also the EV revolution as well.
Wow, and even within the 5G, right, there's so much like cybersecurity, right, transfer of data, analytics, right, and I think you really over-deliver in that, right, sharing about exactly some of your biggest thoughts about what's going to come, right, and one of your superpowers, right, like for those folks who are watching who might not know about John, right, is that he has a superpower, right, in my opinion, of translating like super complicated technologies, right, and terminologies, right, that might be usually difficult for the average folk to understand and translate into very simple, right, to understand, right, terminologies for us, right, to really just apply and to internalize some of these things, like for example, Fastly and Planeted. These are not easy companies to analyze, right, to talk about, right, but you managed to do it in such a much effective manner, right? So with that, I think unfortunately run out of time, right? I would love to have you on board, right, on the second round, right, to see how it goes in the next couple of months' time, right? But with that, can you share maybe a little bit, right, about your YouTube channel, right? Where can folks find you, right, moving forward, right? And then maybe that's also when some folks can actually have their questions answered as well. Can you share a little bit about that, bro?
Yeah, so I think if you want to find me on YouTube, which is where I actually share research without holding back, right? It's really a lot of information. This is where I actually post all my research. I actually have videos coming out every Thursday. So the YouTube channel name is Invest with Jang, Jang, Invest with Jang. So if you are wondering how you can find it, or if you can't find it, always head to my Instagram bio. If you're on Instagram, to actually have the link. The links are all there, right? For my YouTube channel.
Yeah, great. So at the same time, right? So I think what we have worked through, right, is that you also conduct like a very regular webinar, right? And this is like what I call like the foundation, right? The fundamentals, right, of everything of how you look at the companies, how do you actually identify the super stocks, right? And how you actually would advise the average investor to understand first before they actually enter the supermarket, right? The stock market, right? So you want to share a little bit about that, and I'll share the links as we go along as well.
Yeah, so I actually conduct a free webinar on and off. Basically, I actually share with people why growth companies are probably the only way for us retail investors to really compound our wealth, right? Because if you think about it, if you're still investing in dividend companies, these companies are the ones who are going to be disrupted, right? They are not keeping up with the 5G revolution. They're not keeping up with the EV revolution. They're not keeping up with times, right? So, even though they give a stable dividend of 5%, these dividends might not last through the next decade or so, right? So this is something that's very important. And also, if you compound your money at 5%, it will take you about 40 years, right? So in the webinar, I'll share with you why 40 years, right? It will take you about 40 years to hit $1 million. And I think most people do not have the age and luxury or even patience to wait 40 years to hit their first $1 million. So I'll be covering all of that. in that webinar. And I'll also share with you guys this very interesting thing, right? How you can still make money even if you're wrong 3 out of 5 times, right? So that is something that is very, very crucial. Yeah, so I see one comment coming from Joel. Yes, these are pre-recorded webinars because I cover this. I think this is really basic, and I think there's really not much value for me to be repeating the same content over and over again, right? So, and also I also share why you don't need a finance degree to actually succeed in investing. I'll be showing you guys real proof, right? Even janitors can also retire with $3 million, $4 million, and it came out in the news. I'll be sharing more in that webinar as well.
Okay, yeah, with that, and like guys, I think for those who came a bit late, right, I do call the folks at Gym my secret weapons, right? Which is why I can invest a lot more securely, a lot more confidently, right, without spending like thousands of hours in the market by myself. Because the community is strong, right? I think the things that you guys share, right, are things that are not very common in today's world, right? It's really a very good grounding point for a lot of us, right, as we enter the market, especially right now in this volatile, uncertain market. Yeah. So with that, John, any last words before we end off the interview? It's been a great one, right? I love you have been open, right? We share a lot of powerful strategies that can translate into action, how to manage our emotions, right? But any last words you have for the audience out here, right? Who might be just investing and just looking to see how they can make their next growth, right? In the stock market.
Right. I just want to share, some of you may be here, you might be wondering, hey John, is this something that I can do? Is this something that can really help me? Can I really make it, right? So I want to share with you, I was probably in the same position as you back then when I was 18 years old. And I want to share that it really takes you that belief, right? You're just a belief away from achieving what you want. All right. And back then, to be honest, did I really believe that I could make it? I think the answer is no, right? But I want to say, there's a saying that goes, fake it till you can make it. But I would like to say, faith it till you can make it, right?
Wow.
So have faith in yourself, right? Envision what kind of future you want, right? Even if you don't make it, right? So very interesting, right? I actually shared, I actually didn't know I told this to one of my friends. I have one friend in university. So one day we were actually buying a bubble tea, right? I think bubble tea was pretty expensive back then.
Yeah.
Like $5-6. And as a student, I wanted to save. So my friend asked me, John, you're always saving and everything, you're always learning about investing, but what if, you get banged by the car just maybe 10 minutes later and you leave the world? I was kind of stunned. I was kind of shocked by his reply, but I told him something that I didn't expect myself saying also. I said, at least I'll die trying, right? So what do you want your life to be like, right? Do you want to know that you're someone who at least, till you're that big, at least you try? Or do you want to be someone who is just, sorry, Mark and John, I'm just busy with life, because truth to be told, your boss does not owe you a living. We are living in an era where corporate America or even corporates in Singapore, right, or any country, they have no allegiance to the employees anymore, right? They just want to churn out more and more money, right? So I know the system is a bit broken, but there's no point being upset and being all negative about it, right? So if you can't fight the big boys, why not join them, right? The big boys join them as a business owner, right? When you are owning shares, you're actually owning a partial percentage of a business, right? You're a legitimate business owner, right? Legally, and the employees in the company actually work for you. Even the CEO, CFO, COO, they all work for you. So I just want to encourage you guys, right? Why not give yourself that 1 year or 2 year, commit to it and see if it works out for you. And if it doesn't, it's fine, right? At least you tried, right? Because I think the worst thing that you want to do is to live your life thinking, what if I done that? What if I did that 2 years ago? What if I did that 3 years ago, right? And I always like this framework that is shared by Jeff Bezos, because we read a lot of we study a lot of companies, we read a lot, we go through a lot of interviews by CEOs, and we learn from the best, right? And Jeff Bezos has this framework called the regret minimalization framework, right? So he always asks himself, if I do not do this today, and on my deathbed, is this something that I will regret, right? If this is something that you regret, then do it, okay? And if this is something that you think you won't regret, then just ignore it, right? So this is how you can actually guide your decisions or choices in life.
Wow, hey, I love that, man, right? Really about taking action, right? And whether you use fear, right, to actually guide your action, right, or do you actually want to focus on things that actually can bring you to the next level in life, right, and having as little regrets as possible. So hey, right, like I said, we have one life, right, and let's make the best use out of it, right. So with that, thanks so much, John, for the wonderful interview, right. We went deep, we went strategic, right, we went effective, right, in terms of the things we talked about, right. Love your sharing, right, guys. Check him out on the YouTube channel, right. Sign up for the webinar if you haven't found about John, right. He shares the fundamentals, right, sharing the foundation, right, of where you can base your investing strategy on, right. And yeah, with that, we end off the interview. Thanks, John, for the wonderful time, guys. If you're watching on
Thank you,
Facebook,
guys.
Instagram, let us know whether you like it, right, and we'll see you guys very soon for the next interview, right. Bye, everyone. Thanks, guys.
Okay, see you guys. Bye.